Welcome back to The Open on BNN Bloomberg. Thanks for being here with us. Time now for hot picks. If you're looking to buy Canadian, our next guest has 3 Canadian stocks he likes. He says there are opportunities for investors with many well-known Canadian names now in deep value territory. Let's find out more. Chris Murray is our guest, Managing Director of Institutional Research at ATB Capital Markets. Chris, thanks a lot for coming by. You do make the point in some notes that you watch these stocks very closely, and some of them have been pushed into deep value territory. What are some of the factors that are influencing Canadian stocks and valuations? There seems to be so much to talk about these days.
Sure. The first thing is, certainly cross-border trade and the influence that tariffs could have on that. But then the other thing that we start thinking about is the secondary effects on consumer behavior and where that's going to happen.
What about the Trump situation, the tariff situation?
So the broader question is we're really not sure. It's almost been on a daily basis. We'll hear of a different tweet, a different policy, change in policy, and then a reversal, sometimes all in the same day. And so it's been a lot of uncertainty. And of course, one of the problems with stocks is that no one really loves uncertainty longer term.
Okay, let's jump into the names. We have 3 well-known names here that Chris likes at this point. Air Canada is number 1, AC on the TSX, and a stock that has really come down since the early portion, I believe, of December. We'll put the stock graph up now. We can see it graphically. There is Air Canada at $17.28, and you can see how far it's fallen since early December. What's your take on Air Canada? It's down again today.
Yeah, and the way that we're looking at this is that demand for travel surprisingly continues to be more robust. I think the worry is that the uncertainty around the future looks a little shakier. The company did talk about the fact that they are going to be disciplined about capacity deployment as we go into the second half, particularly on U.S. transborder. But the one thing to keep in mind with Air Canada is the majority of their travel is international based. Even when you look at the currency, the U.S. dollar, Canadian dollar currencies move pretty strongly. But if you look at things like the Canadian dollar versus the euro, it hasn't moved as much. So if you think about Canadians traveling in the summer, a lot of those go to Europe. I think they'll be well served by that.
What are your views of the things that can affect airline stocks in a big way, such as fuel price increases, negative headlines over accidents like we just saw in Toronto, labor shortages, disputes with pilots, and so on?
Yeah, so let's go through these pretty quickly. So first of all, disputes with pilots are behind them. They came to an agreement with their pilots late last year. That's under control. The unfortunate incident at Pearson, we'll still get to see what's going on there, but we think that that's kind of a one-off situation. That's not something broader. I think the major issue is around consumer confidence, but I think we'll get past that. And the one thing that we've talked about a lot is that it's not only like short-term consumer confidence, it's also a bit of a demographic shift happening with folks who are a little bit older wanting to travel, wanting to take advantage of moving around.
Okay, number 2, also a well-known name in the Canadian stock market, Aecon Group, the huge engineering and construction firm. $33 is your price target. Let's put up a graph of Aecon, and you tell us why you like this one.
Yeah, well, it's kind of interesting. Yesterday's announcement on the decision to do the high-speed rail between Toronto, Montreal, Quebec City, the Windsor corridor, is a good indication of what we should be expecting as we go forward. The federal government playbook when we get into this uncertainty is let's spend money on infrastructure.
Yeah.
And if you sort of heard the announcements, we expect that there's going to be lots of that. But with that being said, they've already started booking major contracts. We're expecting the backlog to double over the next 18 months. They've got some excellent exposure to some high growth areas like nuclear. They've won a lot of recent contracts with OPG. They'll have exposure to what are called small modular reactors. And we think that there's some pretty significant growth in the coming years.
It was not named, Aecon was not named specifically yesterday with respect to high-speed rail, correct?
Right. That's more of a design consortium at this point. Mm-hmm. That one includes names like Atkins, Realis. Air Canada is actually part of that.
Right.
And then there's a couple of European groups.
Okay. Number 3 is the maker of electric buses in Winnipeg, NFI Group. Price target here, $22. We'll put up a graph as well. There have been over the past couple of years a lot of headwinds facing this company and this stock. The pandemic was a disaster for the stock, and I'm interested in what you think of the U.S. trade situation right now. And obviously, we've seen this stock come down a big way since September.
Yeah, so a couple things. First of all, they're not just an electric bus maker, but they're an all-propulsion type bus maker. So they're generally agnostic to electric versus diesel, CNG, anything you may want to do. What's interesting is, to your point, they have had some manufacturing issues, supply chain issues. We're moving beyond those, and we think that those will be addressed shortly. The one thing that's happened is that they now have a dominant market position across North America, and demand actually is at record levels. Transit buses aren't going away. And so, they're probably the #1 manufacturer in North America of transit buses. Coach buses, so the larger intercity buses you see, they're one of the only 2 manufacturers in North America. There is no U.S. domestic producer of coach buses. So we think they're pretty well positioned on a go-forward basis.
Your view on U.S. tariffs and this company that sells buses into the United States?
So the one thing to keep in mind is that the majority of what they sell already has to meet what are called U.S. Buy America rules anyway. So they have a full manufacturing footprint already in the U.S. that has to meet 70% U.S. content to start with, plus use U.S. steel, plus a number of other regulations that they have to address. So I think they're already well positioned as a U.S. company to be able to adjust to any sort of change in tariff or other industrial policy.
Chris, thanks a lot for joining us today.
Thanks, Paul.
Chris Murray, Managing Director of Institutional